All right. Good evening. How you guys doing? Jay, of course I recognize you, man. I recognize a few names here. Sibu Sis. I messed this up, but Sibu is right here. Norma is here. All right. A lot of new names though. A lot of people I don't know. So I know it's an open house. Welcome. Glad you guys could join us. All right. It's been many years since we've been doing this, and it's been going well. A lot of people have been finding a lot of success with the style. There are obviously different styles of trading, as you know. Um, Me personally, a little bit about myself. I personally, my background is in finance. I worked many years in the finance world, and was involved in investment banking and things like that. And finally decided that trading would be it. Now, some people would think, well, it's easy. It's actually not easy. All right, trading is not easy. Anybody who thinks it is easy is not really telling you the truth. The journey is a very long journey. All right, you already know from all the books and stuff that in order to master anything, it takes approximately 10,000 hours if you're doing it on your own. Okay, if you're doing it on your own. Now, with BTMM, there is obviously a shortcut. Why do I say a shortcut? Is because I've already done the 10,000 hours plus, way more than 10,000 hours. It shortens your learning curve. All right, shortens your learning curve by a lot. So instead of you taking 10,000 hours, you may take, I don't know, 3,000 hours, depending on how focused you are and what you're doing. All right. Like I said, different styles of trading. Some people like to trade off the high and low with the high low drill, right? Jim, Steve, they do that. And I personally like to trade in the middle of the range. All right. So when I say middle of the range means I let them come off the anchors and I like to take the bounce trades. So I take a little piece in the middle. Okay. Um, Over the years, I've refined it to about 80% or better accuracy. Okay. And you can too. It's just your chart vision. It takes a little bit of time for you to get that chart vision. But it's doable. All right. I know many people that are funded a lot using the prop firms. I'm a little slow to get to the prop firms. When you're used to doing a certain way and then all of a sudden you have to change, it does take a little time. But again, the trading itself is the same. It's just the psychology behind it is slightly different. Okay. But having said all of that, I'm glad you guys are here. Let's get going. So let's start off with the disclaimer. Nothing presented in this webinar or video presentation, vocally or visually, is to be taken as trading advice. All content of the video presentation is for educational purposes only. Trading involves risk, so always do discretionary funds when trading. All right, let us look at the news today. All right, so nothing in London. All right, so you do have monetary policy. As you can see, they were not expecting to change the rate, but they did, and that's why if you look at the euros, um, it moved very strongly. All right, 8:30 at the PPI retail sales, and then 8:45 ECB. So U.S. session was a lot of big news. Were there any setup? The answer is there was. There were setups actually there. The question is, can you see it? There were definitely setups um, after 8:30, 8:45, right? So I would say around 9, 8:45, 9, right? As long as not the euros, you could have traded after 8:45, right? Because you got to give at least 15 minutes for the spreads to start off come down and you know. So the question then is, if you looking at this news, right? You're like, all right, there's news. My question is, do you want to see them hit the stop with the news, or do you want them to shift the zone with the news? So you want to see a shift candle, or do you want to see a stop hunt? What do you think? Hey Anderson, how you doing? Yep, Jason, you're right. Yes, Nicholas, 20 EMA is fine. Whatever works for you, bud. Whatever works for you. Hey, Yang, how you doing? All right. You want them to hit the stop, right? You want them to hit the stop because when they hit the stop and then they shift, the shift can a little bit smaller. But when they shift with the news, you're going to get the Euro style candle, which is big. Okay. All right. So let us move forward from here and look at some harmonics. Now, um, some of you guys like to trade harmonics. Harmonics is great as long as you know how to use it properly. All right. There are two ways to use harmonics. Two ways to use the harmonic, right? So, for example, if you're looking at a harmonic right here, right, you're like, well, first of all, is this a trend harmonic or a counter trend harmonic, right? This is a trend harmonic, right? 50 to 100 cross, looking for shorts. So this is a trend, trading line with the trend. This one is the counter trend harmonic. I'm trading into the 50 to 100, right? So if I'm going long here, right, I'm trading into the 50 to 100, which is pointing down, right? So I'm trading a counter move. All right. Trend harmonics are nicer than counter trend, right? You're like, well, why is that? So let's take a quick look at why this is better than the other one. All right. Okay. So with a trend harmonic, okay, there are two ways to use this. One way is you actually trade the reversal. So in other words, I go in here, here's my little thing, and I'm trying to trade this move here. Right. Now I don't personally trade this move. I would look for a reversal pattern. So I'm looking for, if this is the half a bat, I'm waiting for price to break below the nadir. Right. So that's my nadir move. So somewhere in here, I'll be waiting for them to break below. Nice shift candle. Not like barely closed, but like, solid. Nice solid shift candle. So that's a nice solid shift candle. Why? Because I'm always waiting for the pullback into the move, right? I'm always waiting for the pullback into the move to like break below it nicely and then pull back into the move, right? So this is a half a bat move, right? If I don't like the way it looks, like not everybody likes half a bats, right? You prefer an M structure. Not everybody likes a half a bat. So if you don't like a half a bat, right? Your next move would be what? The bounce trade. So you're looking for, right? So usually it'll go mayo, water, ketchup, right? So usually in that order it goes, right? And got to make sense too. It just cannot be like, okay, I'm going to take every single one of them. All right. Now, if this is news, you don't want to trade into a news candle, right? Why? Because there's volume trapped in the spin, right? So you don't want to be like, oh, okay, that's it. That's the bounce rate short. No, this is a hammer. So there's volume trapped in here. And if you look, understanding trap volume is very important. Why? Because that's where the whole business is. The whole business is about trap volume. Where's the volume trapped, right? So if you look, railroad tracks is where they trap volume. So the pin bar, right? Star formation like this, the star formation, that's a trap volume. So they trap volume in multiple ways. They throw a pin, they throw railroad tracks, right? Railroad tracks is like a pin on a higher time frame, right? It's just like going in, pulling right back up, or a star formation, going in and then and pulling off of it, right? The last one, obviously, you don't see very often is a core of wood. It's four candles, right? So they'll go sideways like this, four candles, right? Core of wood. So that's how they normally trap volume. So understanding where the trap volume is great. So you can either trade a reversal or you can trade if that doesn't reversal doesn't play out or you're too far. Like here, it's kind of like too far away, right? You take the first bounce, right? Okay. Now, this is a active harmonic. So normally what I do on a Thursday is I go over every single harmonic for the week. Some weeks you have very nice harmonics where it sets up perfectly. And then there are some weeks you have crappy harmonics, right? It looks nicer on the 4 hour chart like this. 50 to 100 cross, half a bat, break below the nadir. You see that? Close below the nadir, and then you just box short like that. That's how you would do it. And then they would empty mayo. They'll come to the water, it didn't pull back, and then ketchup, and then you go bob from here like that. So there are many multiple ways. This one doesn't pull back, right? So there are multiple ways of trading these things. It's just a matter of what you're comfortable with, right? EJ, there's no harmonic, but as you can see, the levels, been doing the level for many years, the levels are nothing more than the market maker trend. So you have retail trader trend, and then you have market maker trend. We will talk about both of them later on, right? As you can see, there was a harmonic here, and then it kind of failed. So the harmonic was actually over here, whatever this box was, right? So if you're looking at this harmonic, here's the move. See, 52 cross down, and you're trying to trade long into it, right? Those are usually not the best. And when you're looking at that box, what you're looking for ideally is an outside the band, inside the band. It's called an advanced W structure, right? With an advanced W structure, so TDI will create the W. They'll close above the signal line, which it's almost like the 13 EMA, right? Close above, back below, back above, right? So they kind of go back above here, but when price closes above the 13, so most people ask me, why are you using the 13? It's because that's where I know where I put my stop, right? Anytime it closes above, my stop goes right below that candle that shifts above it. So that's the only reason. You could use 10, you could use 20, whatever it is. That way you know exactly where you're putting your stop loss, right? Same thing. You take this trade, and if it does close below, you get out. Now, on an outside the band, inside the band, I'm waiting for price to close above the market baseline. In this example, is pretty clearly far away from there, right? So there will be no entry in here. Even though it gave you an outside the band, inside the band, called an advanced W, which we talk about all the time, right? There is no entry in here because RSLI never went above the market baseline, right? So this would be a pass. Now, the question is, okay, so if you miss this move, can you take this trade again? The answer is yeah, you can. You wait for them to close above, close back below, come back above, and you try to take it again over here as long as they close back enough to give you a one-to-one to the water. Counter trend harmonic, right? Now there are more harmonics. Normally we just use the standard harmonics, the butterfly, the bat, the crab, the godly, right? Now there are things like Cipher and New Star and all the other stuff that you can use too. Okay. But let's see if we can find a nice one. So this is an active right now, right? Active means if you look, you see vector, they create the outside structures outside the band. So what we're looking for is outside the band, inside the band, right? It's pretty simple. Just looking at this, you can see they come off, boom, right? And then they bounce again without creating a lower low. They create a lower low short, create a lower low short again, right? So there are many, many ways of doing it. Here's an anchor, here's the name of the male, right? We talked about this kind of a move here too. That's the quasi, right? We talked something new, right? And so on and so forth. So there's multiple ways of getting to these trades, just a matter of how you want to trade them. But with the harmonic, you're always trying to trade the harmonic, kind of give you a sort of like a heads up to take the trade. Now, if the harmonic is very close to the EMAs, like I said, you simply pass on the move. You don't take that trade. You're gonna get beat up. All right. Let's hope we can find one that is these are all current. Okay, here we go. All right. Now, if you notice, this is the edge of the box, this black box, right? So wherever the edge of the black box is, ideally, I'm looking for them to go outside the band. In this example, it doesn't. See, it's inside the band, inside the band. So I am not very interested in that trade. As you can see, if you bop this trade or if you took this trade, right, inside the band here is a negative scratch. You're like, okay, now it actually closed below, back above, short again, negative scratch, right? The key piece is the outside the band, inside the band. See, same thing over here. I would have actually not taken this trade if there was a harmonic sitting in here, right? This would be interesting. However, this one pinned, the shift candle pinned the water. So the minute they hit the water, they stop hunting here, right? So they're going to go the other direction, ideally, right? So let's see if I can find an example where they actually um, played the game correctly, right? All right, here we go. Let's see if this one played out. So there's the harmonic sitting right in here. As you can see, this black box is all the way here. But I'm more interested in what they're going to do here. And I'm looking for that outside the band, inside the band. So if you notice, the box is here. And most people will be like, well, that's the W. Actually, not true. It's over here. Here the outside the band. Now, if they only create outside the band and no inside the band, so for example, here, price closed above the 13, right? I only got outside the band. I don't have the inside the band yet. So that means I cannot take this trade yet. It's not ready. What about here? Well, this is when the harmonic is. They whacked it here and they create the harmonic. I don't have inside the band. I don't need the inside the band if it's a real W structure. So in this example, let me just draw, right? I like to draw, right? So this is first leg. It did not create a advanced W in here. So I can't take this trade over here, right? Here's my real W structure. Harmonic is acting as support. Always think of harmonic act as a support or resistance, right? So here's my completion of my W structure. I don't need an outside the band, inside the band if I have a real pattern. I'm looking for longs in here, right? I'm looking for longs in here. Now, again, 52 is crossed down, so these counter ones, they are not usually the best moves, especially if it is so tight. I don't really have a nice one to, I mean, I barely have a 1-to-1 over here. I'm not a big fan of these, right? I would prefer having a lot more distance so the movement is a little bit smoother. All right. Okay. So this is that. Can they create another pattern? The answer is it can. What are you looking for a second pattern? Same move, outside the band, inside the band. So when they don't create the outside the band, inside the band, it's all garbage to me. Right? Now you're like, well, can I still use the harmonic? The answer is no. Why? Because it created a new anchor. These harmonics are reversal anchors. The reason Steve gave us these harmonics is to identify anchors, right? Because people were like, well, how do I know I'm in level 3? Harmonic will tell you in level 3. All right, what happens if I miss the harmonic? Miss the harmonic, wait for the first pullback, the 1 hour 50-50 bounce, right? Okay, see? So this is right here. The box is right here. The box is not here. I don't have any boxes in here. Well, actually, I do have a box in here. Hold on, my bad. This whole box is all the way down here, right? It failed because price went below the box. And because price is sitting right over here, I didn't see the bottom of the box. Okay, so there is the box here. There is another one here. So let's take a look at this. Let's look at the first one. Here is a example. So my box is right here, right? So I'm looking for the outside the band. Stacy outside the band. Here's my outside the band, inside the band. Cool. So I got my outside the band, inside the band. That's considered a advanced W. When do I take the trade? Price closed above the 13, right there. RSI is above the signal line, above the market baseline. I'll fib this candle. I'll wait for the pullback and I'll take the short. I mean, I take the long. As long as I have 1-to-1 in here, I'll take that trade. That's how you would trade the harmonic. Simple. Keep it simple. Don't complicate it. Can I take a next move? Yes, as long as they give you an outside the band, inside the band. So I only got an outside the band, inside the band is here. Really ugly. All right. Yeah, it's called a 1-1. One leg outside the band, one leg in the band, called a 1-1. Right. RSI above the signal line, above the market baseline. Notice if you measure this candle is about, let's say 29 pips. Right. I got this little nifty tool. Right. So if the shift candle is 10% of ADR, right, which is 11 pips, I'll fire a market order. So if this is a 10% candle, market order, the minute that candle closes, market order. If it's 20%, that means if this candle is 20% of ADR, right, which happens to be around 21 pips, I'll wait for a quarter pullback. So I'll take my little fib tool. I'm going to fib it. As you can see, here's my fib tool, right? I got 0, quarter, 40, 50, and this is obviously the bottom of it. So 0, this is my quarter pullback. Here's my 40%. Here's my 50%, right? So if I fib this candle from pin to pin is about 28.6, let's say 29 pips. Doesn't matter. It's more than 21 pips, right? But less than 32 pips. So I'm looking for a 40% pullback. Here's my 40%. So I'll put a pending over here. Guess what? When the candle closes below the 13, I'm out of that trade. I'm out at a break even scratch. So, what you're doing, in fact, you're playing offense and defense. You're trying to take this trade with the least amount of risk, right? You're still taking the trade. So now if this one runs, because you took it on the pullback, your stop is smaller, you're going to hit TP faster, first of all. Second of all, if it closes below the 13, you want to get out, your scratches are smaller. And guess what? If you didn't, next candle comes in, you got stopped out because your stop is below this low, right? So following the rules, because, well, there are tons of rules on from the way I trade, right? You got to remember, I have a finance background, so I like everything to have structure. There's a set of rules. You follow the rules, and over the, like I said, over the 10,000 plus hours of homeworking and trading and stuff like that, I've come up with a lot of rules to prevent yourself from being in trouble, right? So these will prevent you from getting stopped out and being in trouble, all right? And then that's it. The next time out of the band is over here, and you do have a next harmonic over here. So even if you took this trade, you got out with a zero scratch. All right. GA, same thing, active. So there's a lot of active harmonics. Okay, nothing, no harmonic. GF, no harmonics. AU, this one failed. It's kind of in the middle of the range too, so it's kind of weird, right? So this is not very good. Sitting in kind of like in the bottom. It should be, these things that you can see sitting on the top or sitting at the bottom over here, right? Not like in the middle over here. All right. Let's take a look at this one really quickly for a nice clean one. Right. So you see, edge of the box, outside the band. So you got outside the band, inside the band here. RSI is already above the signal line, above the market baseline, but you can see the 13, the first break of the 13 is here, right? Now the candle is a little bit crappy, right? You got wicks on both sides. Could have been news candle, 8:30 news candle, 9 o'clock news candle. So you have to be careful with trying to trade, you know, uh, a candle with wicks on both sides, right? Your best candle will be a solid candle with no wicks or very little wicks. If you see a candle with wicks like this, inverted, normally you have to fib the last two candles and put your stop below the swing, right? So your stop will have to ideally go below like the swing over here, right? Whatever that last swing is, right? So yeah, so if you see wicks like this, both you'd rather pass on this move because it's not a very solid candle. All right, so let's keep moving forward because we got a lot of stuff to go through today, right? And then nothing there. Nothing there either for this week. This is active right now, so there's a lot of active harmonics going on in here. There's one over here. I just want to show you guys a really nice one, right? There we go. So you see outside the band, so here's the harmonic. You see this left edge is outside the band. That's where you're looking for. That's called the outside structure, right? You look for the outside the band. Notice the signal line is inside the band over here. So that's the outside the band, inside the band. And I'm not interested until price close below the 13. RSI below signal line below the market baseline. So you got a 1-1 with RSI below signal line below the market baseline. Wait for the pullback, stop goes above the shift candle. See how nice the shift candle is? It doesn't have wicks on both sides. Little wicks on either side. That's okay. I'm okay with that, right? Wicks, like little wicks on one side, little wick. But I don't want a candle like this as a shift candle, right? Nice. You measure the candle like we talked about, right? It's about 17 pips. So it's between 10 and 21. So I'm looking for a quarter pullback right there. Boom. Stop goes above there. Short, right? Notice the distance. I'm not like 7 pips away from this from the water. I got enough distance. I got at least 1 to 1 or more. That's what I like. So something like this called an advanced stem. I like these trades, but it got to look just like that. All right. Okay. Let us move on to something else that most people want to hear about, levels. All right, so let's call this the presentation part, right? Let's call this the presentation part. So we're going to look at levels. All right. How are we going to draw levels? What is levels? Levels is a market maker trend, right? Can you use the retail trader trend? The answer is yes. You can use the 4-hour trend, right? The way I would use the 4-hour trend is if price is on the right side, for example, here, price above the 13, or something like cross. So that's my 4-hour trend. Boom, right? When does it end? Right here. So when price closes below, done. Now, you would use 4-hour trend on lower time frame entries, right? I'm looking for trades on the 5-minute or the 15 minutes. I'll use this trend. It's a little bit easier. So every time, so in other words, how are you going to use it? Every time they pull back, right? You're going to go long, right? With a setup. I'm not saying like just every time they pull back, you go long, right? But they give you a setup. They'll bounce usually off the water. That's the easiest one to see. And then you go take the trade. Well, take the trade. There'll be probably nothing there. Take the trade. And then once it closes below, boom, you're done. Right? So this is literally the whole week from here to here. Right? Unidirectional move. Right? For those people who are trading maybe even 15, 30, 1 hour, and you want to use the daily trend. Why the daily trend nice? Because it's multiple days. 1, 2, 3, 4, 5, 6, 7, 8, 9. Right? Now you're like, well, Car, do we have to wait for price to close below? The answer is on the daily, the answer is no. Or something like cross on the daily. Right? So you get out a lot faster. So the minute this candle closes like this and this one pinches in, you're done. The trend is done. Right? So you can use the daily trend, or if you're more advanced, you're going to try to use the market maker trend, because the market maker trends changes. So you'd be like, okay, they're doing a reset, blah, 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 and so on and so forth. So the simplest way of looking at a trend is you find the peak. So for example, here is my high, my peak, right? That'll be my peak. We look back, but let's look to the right first. Okay, so here's my peak, right? Now this is the 4-hour chart, so I can't use ADRs, right? Because the ADR is blown out. So what you're looking for is consolidation, drop, consolidation, drop, consolidation, drop, like that, right? So here's my first consolidation, right? Consolidation. They drop, they consolidate. They drop, they consolidate. They drop again. Now you're like, well, why do you have 4 levels? You got to remember, we created this structure. Market makers don't have that structure. They don't be like, well, has to drop 3 levels and then go to rise. No, they can go 4 levels if they want to, right? They can push through and go one more level lower if they want to. They don't have a rule book that has to go 3 levels and then reverse. All right. Now, so the easiest way to market, especially 4-hour and the daily, is because you can't use the ADR, drop, consolidate, drop, consolidate, drop, consolidate, drop. All right. Simplest version. Now, to find the true level in terms of trading it. So this is my 4-hour level, right? The orange boxes. Okay. You can use a different color box for the 1-hour levels. Now we're actually trading the 1-hour levels, because if you're trading a 5-minute and 15-minute, you're probably trying to see where the resets come in on the 1-hour chart, because the 4-hour, you can use the 4-hour, right? But it's more, its ranges, the range on a 4-hour consolidation is pretty big, right? So let me change this into like this blue, right? So here you can see they can, now you're like, well, that's the new high. Yeah, but again, look, it's 20, 20, 24, 25 pips. It's marginal, right? when it breaks above, it's about 50 pips or more. That's when you actually, so between this to the, you're actually not measuring from here to here and be like, okay, that's not one ADR. It's always that pullback is from here to here. You're measuring that one ADR. That's how you're gonna look for the one ADR. But it's a lot more than just 25 pips between one level to the next, right? We talk about using agent boxes and things like that. There are different ways to do that, and that's another way to look at levels. There are a couple of videos in the BTMM forum that talks to you about how to mark levels, right? You have a definitely a different advantage using that. Now, you could be like, well, the distance from here to here is not 50 pips. It's only 36 pips, so it's not really a new level. You're right, it's not. I just call it a peak. It just makes it nicer for you to be able to see it, right? You just makes it a little bit nicer for you to see it. So like this would be one level. This would be another level, right? And then it drops 1350 cross. So so this would be like something like that. And then they drop big. That'll be a level 2. And then here will be a level 3. Now with this kind of a thing, you can measure ADR. You're like from here to here, it's about 237 pips. So that's 3 times ADR, right? This is GC. So if you go to GC here, right, 214 will be 2 times ADR. And this is about 240. So, you know, kind of in level 3, just not full 3 times ADR. So then it just goes sideways like this for a little bit. 1350 cross becomes a level 1, right? Remember, there are resets. Why is that a reset? Remember, if you shrink it back and look, this is my level 3. This is my level 1. They will create a reset on every single level. Okay? So they did a little reset in here, right? Because my bias is still short. So they'll reset it, making you go long. And then same thing, 1350 will cross, be a level 1, right? This will be a level 2, right? So you can measure it too. From here to here, it's about 240 pips, like we said, about 214 pips would be level 2, plus or minus, right? Not an exact science. This would be a level 3, and this is the peak, level 4. So apparently the 4-hour kind of lined up with the 1-hour, except the reset happens because on the 4-hour chart, right, I'm sitting in level 1. They have to do a reset. Notice there's no reset here because they didn't come back and hit the water, which would have been the 1-hour male. So if they came back in here, boom, and then they would come back and reset, especially if it's 3 times ADR, and then they would reset, creating a new anchor. So reset the new anchor, right? So they'll come down, 3 levels of drop, they'll rise usually 1 level, sometimes 2. Usually 1 level means they'll create that M of the Mayo, and then they'll reset it, and then they start dropping again 3 times ADR. And then you'll be in level 2 at that time on the 4-hour chart. Sometimes in level 3, right? Depending on how big these drops are, right? So that's a pretty simple way of looking at levels, right? So that's the level within the level. If you look at the 4-hour chart, okay, sometimes what happens is you're like, well, car is supposed to go 3 times, 3 moves, 3 consolidation up. Supposed to, right? But if the daily is creating a second leg, it won't go. It won't go higher than that. So there's a little trick to that, understanding where you are also on the daily. So starting levels, you thinking is very easy, but actually what you have to do is you have to go from the daily all the way down. So you have levels on daily. That's why if you look, I have levels on the daily, right? That daily levels will allow me to know where my resets are on the 4-hour chart. Okay. All right. That was just a quick little uh, explanation on levels. All right. Hopefully that was educational. All right. Okay. Let's talk about entries. All right. Let's talk about entries. So, as you can see, everybody knows this. This is an AR move, right? AR means they induce outside the Asian box and then they'll come and they'll bounce, right? So if I'm looking at my levels, right? I'm sitting a level, coming off a level peak. I'm looking for longs in here. I'm not looking for shorts, right? I'm in level one. I'm looking for longs. Perfect. Lines up with everything I want. I'm looking for them to hit the stop low rise. I'm looking for longs, right? So we know, right? Once they hit the stop, I know the timing is a little bit off. I presume there's no news yet. As you can see, the candles are not very big. So there's no news here at 8:30. All right. So the shift, I like personally to as you can see, the Mayo sitting there. I like the 30 minutes to roll. Right. You're like, well, candle is crap. It is. So what I'll normally do is I'll fib the last two candle, put my stop right below here. Right. Put my stop below here. And then I'll take this trade. So how do I do that? I fib the last two candles. So I literally do this. Boom, like that. Fib it, and then I measure from this pin to this pin. So it's about, let's say 14.7, 15 pips. Then I'm looking over here and I'm seeing, okay, so 15 pips is approximately less than 20%. So it's between 10 and 20%. That means as long as it's not more than 20% or 17 pips, I will have to do a quarter pullback. If it's more than 20, it's 17 pips. So it's like 18 pips, I'll have to do a 40% pullback. All right. So this is a quarter pullback. So that's when this candle closes. I'm going to take this trade. Stop is going to go below here. Spread plus 2, right? 13 pips, and I'm gone. Right. So this is called a trap. See how they close below 13 and they break back above? You're going to go long. If this candle is a nice solid candle with no wicks, you're going to put your stop literally right below this candle. Right. If the candle looks a little crappy, you'll fib 2, or if it's really crappy, put below the swing. Right? So in other words, if I have a tiny body but wicks on both sides and I still want to take this trade, my stop is going to go below the swing, right? That means your stop is going to be bigger. Okay? It's up to you. However you want to do it, that's how you would take this trade on a trapping move, right? Now, same thing, right? If you look at this, it's very similar to what Steve always tells us. What does he tell us? You got an M, right? Then it's going to bounce. Then it's going to bounce again. And then it's going to create a reversal, right? If you notice, lower lows, bounce, lower lows, bounce, lower lows. Now, this is dangerous, but if your skill set is good enough, you can actually take this trade back to this low where they're creating your second leg. Okay? If your skill set is good enough, you can take this, the third move. So you'll have one option, second opportunity, third opportunity, and then you're done. It's going the other direction. Right? So if there's a harmonic sitting there, you're waiting for the 1-1, bam, the other way. Right? Okay. Right. So this is the bounce. Okay. Comes up the water. So you see how they create a lower low? They bounce, but it's very ugly. The Mayo is sitting there. So you're going to pass on this. You're not taking anything over there. Why? Because you don't know if they're going to create, see, you went outside the band, you don't know if they're going to create that W going long in here. So this is a very risky trade. And also you got the blueberry sitting there. So you're waiting for them to break. So here's a new low, lower low. This one is end of the day. It doesn't really touch. Here's my move, right? I just like the 30-minute roll just to be on the safe side. Now the blueberry is sitting over here. I'm not a big fan of these, right? But just presume the blueberry is not there. We're just looking at it conceptually, right? That'll be my shift candle. Pretty nice. I got a little wick on the top, which is fine. Going short, inverted hammer is fine. I just don't like the wick at the bottom, right? I don't like a hammer too much, right? I would be interested in taking this trade, right? So literally, I would measure the candle since it's the trapping move, and that's my shift candle. Put my stop right above the shift candle, okay? Because I will show you a bouncing move where it'll set it up, and it's like this: is the bounce. They'll bounce off of it, and then now you take the trade. You stop at the scope of the swing point. Let me see if I have an example of that. Right. So earlier you saw the levels. I know somebody was asking about the levels on the 1 hour chart. I'm sitting level 2. Look for them to come up. Hit the stop high, roll over and drop. Right. So on the 15-minute chart, I'm looking for an M off the Mayo in here. Can you trade this back into the range? Yeah, you can. You got outside the band, inside the band. So some people will trade it back, M off the Mayo, trade it short again. Right. It all depends on your skill set, whether you have enough experience to do that. So here we go. Right. They create a lower low, bounce. That's the bounce, right? Bounce off the water. Close below the 13. I wait for the 30 to roll. So in this example, it's happened today, right? It's a trapping move. Trapping move is close above 13 back below. So got a solid nice candle. So if you look at this, about 29.6, which is 30 pips, right? Doesn't matter if it's 29.6 or 30 because it's clearly above 27 and clearly below 41, right? So I'm looking for a 40% pullback. So I'm just going to fib this pin to pin, right? So I'll just do it like this so you can see it. And I'm looking for 40%. So my 40% get picked up right here. I'll drop a pending in here. It'll get picked up here or maybe even the second candle. Doesn't matter. Let's presume I got picked up in the second candle because of the spread. Stop goes above there, 20 pips, and it drops. It goes about 20 pips, 20 plus or minus, right? Now, Steve always said, after 2 hours, if you're not going anywhere, either you move your stop to break even or you close your position if you're slightly negative. So in this example, right, not showing you everything is positive. I'm showing you how to manage your trade as well, right? So I'm entering, let's presume, on this candle. So here's my entry on this candle. So 2 hours will pass. That means a 30-minute candle. So I'm looking for 4 candles. 1, 2, 3, 4. So I'm here. That means this is the 5th candle. So when this candle opens up, I'm going to have my stop either move to break even if I'm positive, which I am. So my entry is over here. And I'm over here. I'm plus like 9, 10 pips. 9 pips, 8 pips. I'll move my stop to break even. They'll come right back right here and they'll wick me out. If I'm negative, I'll close the position immediately. But if I'm positive, I'll move my stop to break even. Right? All right, no harm, no foul, right? So that's done. You're out of the trade. They come back. They hit the water a second time right here, second leg. You're like, wait, yes, it's a second leg. It did not create a lower low. You see how they create a lower low from here? From this move, lower low, bounce. Does not create a lower low, first leg, second leg. If it creates a lower low, it's a new first leg. Close below the 13, same thing. Wait for the 30 to roll. My entry is always on the 30, right? So I'm looking at this candle, a little crappy candle, but again, if your body is larger than the 2 wicks combined, then it's okay. Put your stop above there. If not, you have to fib the last 2 candles, but this candle is smaller than this candle, so your stop still goes above there, right? Spread plus 2, okay? Same thing, you measure wick to wick. It's about, let's say, 20 pips, right? So I'm looking for a quarter pullback on this one. Drop the fib, quarter pullback. They'll pick you up right there. Boom. Stop goes above there. First candle closed, second candle closed, third candle closed, fourth candle closed, right? So I'm all the way down here out of near my TP on this move, right? Just showing you entries. And this is all today, by the way. This is today. So you've taken this one, scratch, second one, boom, TP, right? Ashtomeo, pull back, bounce, right? Creates a lower low bounce. This is my first bounce. It doesn't really go anywhere. Second bounce, right? You can look at the first bounce if you want. All right, here's my move, first bounce, right? Lower low bounce, Wait for the 30 to roll. See, now if you notice, I got two candles, right? And they're both little. This is a hammer. This is a this got pins on both sides. So I'll put my stop right above here, right? So that means I'm going to fib from here to here. I'm not going to fib this candle. I'm just going to fib from here to here. It's about 29.8, 30 pips. So it's about 30 pips. So slightly larger. So I'm going for a 40% pullback on this one, right? I use scripts, so 40%. So I'm fibbing. I'm actually fibbing to here, but I just put it like this so you can. So 40% is right there. So I'll get picked up on the second candle. Price closed above the 13. I'm out minus 4 pips, right? Because I have no idea if it's going to come right all the way back to the water here. I have no idea. So I just want to get out. And my stop is right there. Right? Even if I put my stop above there, if I fib the two candles, well, they're both ugly candles, right? 13 pips, I'll still be getting out here minus 4 pips, right? It won't matter. Okay. First leg, scratch. My second leg would be over here. First leg, second leg. So when price closes below, I'm waiting for the 30-minute also to close below the 13, right? 30 minutes did not close below 13 until here. See, that's why I don't take it on the 15, because guess what? If I took it and it closed back above, I got to close this position over here. If I put my stop here, I got stopped out, right? Right? Price closed below. I'm never taking any trade on the 15, so it doesn't really matter. I'm waiting for the 30, right? Wicks on both sides. Okay, so if I'm not liking it, if I want to put my stop above there, that's fine. 27 pips. And first candle, second candle, third candle, fourth candle, still positive. If I move my stop to break even, I would have nailed the trade. 1 to 2, right? Now, oh, messed that one up, right? Now, this is if you're using levels, right? You know you're on level 3. Like I said, if your skill set is good, you can trade into the first leg on the 1 hour, right? If you're using the daily trend, it's pretty nice too, right? Price is below the 13 hour setting line cross, so you're using the daily trend. So you could have used it both ways, whether using levels or the daily trend. As of right now, currently in the DMR, I am actually teaching how to trade in line with the daily trend in case, if you're relatively new and you're like, well, it's going to take me a while to learn the levels, then just how to trade in line with the daily trend is a very simple, easy to understand, rule based trading. Believe it or not, I have a pretty high accuracy too. So, right? Okay. And the last bit I want to talk about, actually, there's maybe one more. Okay. So here's one more. So you're like, well, see, close above the 13, right? So as you can see, creates a high bounce, right? If you notice, blueberry there, but this candle did close above the 13, right? So if you're interested, this is the one I want to show you. Candle got wicks on both sides, looks very ugly, small. So you have to fib from here to here. And you always measure from that candle to where the swing point is 11 pips, right? So either 40% or quarter, right? 11 pips is right about there, quarter. So 8, 9 pips, 10 pips, and then you go long from here, right? Now, what happens if you have an EMA or a blue tracer right around that area, close to 10 pips? Like, let's say this was 8 pips, right? From your entry here, 8 pips, right? This happens to be 6, right? So, right, you're pretty close. What do you do is the minute it taps that the blueberry, you move your stop to break even. Because if it does that and pulls back down and gets you out, you didn't lose anything, because it can create, as you can see, it can create an M off the blueberry and drop. You don't know that, right? You don't know that. So for me, always be, it's better to be safe than sorry, right? This would have clearly paid out. But just a little trick, right? If you learn nothing all day, but just follow that little trick for waiting for the 30 to roll, it would have helped. As you can see, I just showed you a fraction of the setups for today, right? And the market was, as you can see, it's really choppy and very ugly, but there are ways to trade it. Okay, let's look at one last piece. It's very interesting because a lot of you guys are trying to do it, and I'm starting to sort of talk more about it, and hopefully you guys can join the prop trading. Uh, I don't want to call it a revolution, but prop trading journey with us. Okay. All right. So as you can see here, we are with the various prop firms. Okay. You got the smart prop, you got top tier, you got Blue Guardian, Bespoke, and FTMO. All right. FTMO has been around the longest, right? So FTMO it's like literally the gold standard, right? Right. Now, you guys can go to those websites and take a look at those qualifications. I even kind of put the qualifications up here. As you can see, smart prop, you can go up to 2.5 million. They start paying out 85%, then 90%, and you start off with 200,000. And then they'll scale you in, right? Top tier, same thing. You start off with 300,000, goes up to 2 million, 80% first, and then 90%. Blue Guardian, 1.8 million. Bespoke, it says bespoke, not bespoken, right? You can go with 400,000, right? But the leverage is 1.6. I'm sorry, 1 to 60 leverage. They don't give you, but it doesn't really matter. You're trading anywhere between half to 1% every trade, all right? Up to 4 mil, and FTMO up to 2 mil. Okay. Now, so that's about 1.3 million. I know some people that are even higher than that. Okay. 10% a month. Why? Because you probably need 10% to pass these challenges. So let's look at 10% a month. Can you do this? The answer is yeah, you should be able to do it. All right. Follow the rules. You should be able to get to this number. Right. How soon? I have no idea. Depends on your chart vision. Right. But if you look at the numbers, so 10% at 80% payout, right? There's an 80% payout. You're gonna get 16,000 on this move right here. Okay. 25,000. These are all based on different percentages and stuff like that, right? So it's all um, at the lowest percentages, right? Things like that, probably 80%. So let's keep it simple. They pay out in 4 months before they increase your capital. So every 4 months, if you do 2%, again, this is very generalized, right? They increase your capital by 25%. Okay. So if you got funded on all of them, 1.3 mil, in 4 months, your total payout will be about approximately 420,000. All right. And then the next 4 months after they increase your capital from 1.3 to 1.6, right? Your next 4 months, you're going to have half a mil, and so on and so forth, right? Let's presume you don't even do 5%, right? I'm sorry, 10%. Let's presume you only did 5%, half of that. That is still nice in 4 months, right? That is still a nice number in 4 months. Okay. Is it doable? The answer is it is doable. 5%, if you sit back and think like 5%, okay, 5% a month, not a week, not a day, it's a month, right? Now all these prop firms have unlimited time, right? So just take your time to pass. Once you pass as many as you can, because I got some people that are like pigs, right? They want to pass every single challenge. So they sit there and they take all the challenges. They have like six, seven challenges and they're doing all of them. 200, 200, 200. They got funded one or two at, once they got funded one, they took the payout from there to start funding others. They don't want to keep paying their, from their own pocket. They did one, they passed, they got paid out, they start funding two more. They passed, they got paid out, they fund another three more, and so on and so forth. So now they're like 1.6 mil, right? Some of them are 1.8, 1.3, 1.2. So that's what they do one, and then they take that amount and then they do it, right? So once you get to a certain point where the number is pretty large, you don't need a lot. This is a month, 5% a month, right? Even if you took one trade a week, you should be able to hit that number. That's not bad in 4 months, right? Right? Now, earlier I did mention briefly that if you do enough homework, the hit rate is pretty high. What do I mean by that? So there are rule sets and then there are filters. So you'll be given a set of rules on how to trade certain things, like a bounce trade, for example. So I'll give you the rules. You're like, all right, these are the rules. Okay, cool. Then you have to homework it. Hard right edge training, marking flashcards, so on and so forth, demo trading and things like that, right? What you're going to realize is like, okay, there will be some trades you should not take even though it meets the rules. How will you know those? Well, homework will tell you, okay, these meet the rules, but they don't work. Well, why did they not work? Well, I'm too close to the blue tracer. I'm too close to the EMA. I'm taking a long when it is overbought on the daily. Things like that. So there are EMAs on the 30-minute chart. You're trading right into it. There's a daily EMA sitting there, but 1 hour chart looks perfect. 30-minute looks perfect. 15 minutes look nothing there. And you take it and you're like, well, why didn't it move? Sitting on the daily EMA, 50 EMA on the daily. Things like that. So you have to be, those are your filters. Though you have to be able to see those things, or trading into a harmonic. They're the 4 hour harmonic that you're trying to go short, harmonic that you need to go long, and it's kind of choppy you up a little bit. And you're like, I don't know why I didn't move. I took a scratch on it. You're trading into some sort of support and resistance area. Those little filters you should be able to see, right? You could be in level 3 if you're not using the levels, but you're using the daily trend. You go into a level 3, they start pulling back. You're like, whoa, why? Well, you went to a level 3, they're coming back, they're going to reset and then continue long after that, right? But on the daily, you're not going to see it. It's just one candle, right? So you're not going to be able to know there's a reset going on over there. You just have to know these are called variations, and you have to know these filters. And that's going to distinguish a successful trader and somebody that will take a little bit more time, but it takes work to get to there. But it's very rewarding. I mean, if you look at these things, you're like, man, okay, I'm not going to take this. I'm going to take this. So, you know what? This meets the rules, but I'm not going to take this. And 30 minutes later, you come back and laugh. See, I'm glad I didn't take this trade. Or sometimes there's hidden news. You don't know that, or there's certain news and you didn't happen to look at the news and you got stopped out. You're like, wow, why did I get stopped out? Look, oh, you know what? New home sales, the USD move, and they moved all the majors and the crosspairs were chopping, right? I've been there, done that, everything in between, right? I learned like most of you guys say, you learn the most when you look at something. You're like, man, this thing followed the rules. Why did it not work? And then you go back and you look and see, oh, this one, okay, yeah, this was totally overbought. I didn't see it. I didn't realize it. Okay. All right. So any questions, please email support at beatthemarketmaker.com. Let me just write it down here for you really quickly. Support at beat the market maker, no s.com, right? Market beat the, it's just like literally, it's just like one for, it's just like one word, even though it's multiple words. Beat the market maker.com. All right. And admin should be able to answer questions for you. Okay, let me see. Let's quick little. All right, Jason, how you doing, bud? Yes. So Max is asking my most reliable. I like the bounce trades, man. Any bounce trades, I'm looking for them because once they come off the anchor, why anchor? Is because they're collecting contracts in here. They're collecting contracts in level 3. They're collecting, you know, their all their contracts, and the minute they shift off the zone, they ain't coming to get me, right? Then I'm looking for every reason to go short. Obviously, when they start when they start going parabolic with news, rate news, then it gets a little bit hard. But when it's really really nice, you destroy them, right? So if there's news here, you can't really take this trade. But we always talk about this is coming off the water. The 13 EMA, why do we use it? Because that is the water on the 5 minute chart, right? So if I go to the 5 minute chart, this is September 12th. See, they'll come off the mail. This one doesn't touch the water, touches the water here. So I'll be looking for a reason to go short over there shortly. So I wait for them to roll over on one more higher time frame, which happens to be the same time, and I'll be looking to confirm it, and then I'll be looking for a reason to go short over there, right? So it's not arbitrary. It's planned. They go mail water ketchup. The water becomes the anchor on the 5 minute chart. Becomes the M of the mail right here, right? And then right after the mail, the next move is the water move, right? If you want to be a pig, you can go down to the 1 minute. This will become, if it's high enough, like if it traps if it bounces off the water, this will not become an M of the mail on the 1 hour, right? If it goes above and comes back below, that'll be your M of the mail. Let me show you what I mean by that. I know it's pretty wild. Actually, we look at the 5 minute chart and find that move here. Let me see. Let's find something nice, right? Right here. Not really. It's a bounce, still a bounce. I don't have a 1 minute in here. Hold on. Let me see if I can drop a 1 minute in here. I don't look at 1 minutes. It's too fast. It's too crazy for me, right? That's why I removed it. I don't need it. Okay. But if I'm looking at the 1 minute, you see this trapping move here? I know this is news, right? Go back to the 5. Let's find the day. Oh, not liking me. Let me see if I can find something over here. Here. That's the 5 minute water, right? This is today. It's the end of the day, right? Whoops, sorry. That becomes the M of the mail, and that's my move. The next move is right here. It's the same thing, it's just fractal. We talked about that already. Okay? And if you look at the 5, it's just a touch, right? It's just a touch. It's just kind of pin. And then if you're waiting for the next, like I said, the next higher time frame, you just wait for this and you'll bop the trade right here because it's the bouncing move. It got 2 pins. You stop it going above the swing point. So sometimes this can have the bigger wick than this. You don't put it above here. You put it above the swing. Happens to be the same spot, so you just put your stop right there and go short like that, right? You got the first move, and then your second move will be somewhere in here, which will line up on the 1 minute as well, right? Actually touch the mail. See, it's the same. It's the same thing, on and on and on and on and on and so on. But I don't like the 1 minute because it's just a little too fast for me, right? I like 15. Why? Because Steve always said 15 is close enough to the action, far away from the noise. So, and besides, I showed you, you don't need 20% a week, right? Anywhere between 5 to 10% a month. And if you pass a whole bunch of challenges on that spreadsheet I showed you, you're going to destroy them, right? Consistency is the key, which is what I like, which is what I teach. Okay. Let's see what else. Any other questions in here? What time does the blue box? So the blue box finishes at 1 a.m. The blue box finishes at 1 a.m. Eastern. 1 a.m. Eastern. What session and time frame is your favorite setup? Me, I like to trade London. That's why most of you guys don't know, obviously, since you guys are kind of attending the open house. I like to trade London, ideally in Europe. So I'm usually in Europe, Spain. I'm usually in Spain, I would say half the year, just so that I can trade without. But the other half of the year, I got to leave the country. So you can stay there 3 months in a 6 months period. Then you got to leave for 3 months. You got to come back another 3 months. All right. Um, what program you collect your data on and filters to minimize trades that don't work? MT4 right here. So I have a spreadsheet. I mean, again, I've been doing this for so long. I just kind of it's just second nature to me. But you just put a spreadsheet, just like how I had a spreadsheet like that, right? You just put a spreadsheet and just track it. You're like, okay, write down the ones that didn't work and then go back and see why it didn't work. All right. Especially if you have something that did work. All right. What's the actual time that you start looking for your setups? I trade, so like to start trading around 3 a.m. Eastern. So I'm usually up by 2:30. By the time I get to my charts, 2:45, then I just look. I'm just before I used to have all my charts on the 1 hour time frame, but now I just kind of look at the 15. I just like literally I make a decision within 3 seconds. So when I'm looking at the charts, I'm looking at it like this. Well, not that small, right? It'd be something like this. And I'll just look at it very quickly on the 15 minutes. I'll just go boop, 3 seconds, boop, and I'm just looking very quickly like that to see where my setups are, right? All right. Um, all right, Jason, appreciate it. Jay, thank you. John's like, how do we pass? It's pretty difficult. Actually, it's not. You just have to follow the rules, man. When you do enough homework and you follow the rules, you're gonna know before you even take these challenges what your hit rate is. When your hit rate is pretty decent, I would say 70, 75% or better, then you know you're gonna pass, right? Yeah. So back in them days, I used to do a 1/3 and 50, but now, yeah, quarter, 40 and 50, a little bit better. All right. Those black boxes are the ones I actually drew, Nicholas. How do we get the harmonic in your chart? You can actually go, if you go to Forex Factory, right, and you just type in your harmonics indicator, right, it will, right, as you can see, there's all, I don't know what all this other stuff popped up, but um, if you popped in the harmonic indicator, it'll actually give you the indicator. It'll tell you what the indicator is, right? All right, I think that's about it in terms of questions. All right, any other questions? You can also shoot me an email. Um, you can actually send it to fractal, fractal pips at gmail.com. Fractal pips at gmail.com. Any questions? If I can answer, I'll be happy to answer them for you. Right. My TDI is just a standard TDI, Omar. It's just a regular TDI. It's not. I didn't change anything on this TDI. Just a whatever the TDI. I just changed the color of it, so because it's like green over here. I just made it black so I can actually see it better, and I just darkened this a little bit so it's a little bit more cleaner to see. Do you use the WSM viewer for your trade? The WSM viewer is actually it's like a simulator. It's a trade simulator, so you can simulate whether you can see the setups on the hard rate edge or not. It's pretty cool. It's pretty cool, right? If you have a loss or a couple of losses, theoretically, will you push hard end of the day positive, or can you just accept a losing day? Um, oh, I accept the losing day. I'll just be like, all right. I don't look at it by days. I look at it by weeks, right? So my goal is anywhere between 3 to 5% a week, right? I like to trade depending trend 1%, counter trend 0.5%. I'm not a big fan of counter trend. I normally like to trade in line with the trend, whether it's the daily trend or the market maker trend. So I like to do that. So I can always try to go 1 to 1, 1 to 2, 1 to 1, 1 to 2, 1 to 3, depending on how nicely stacked it is. We talked about stack trades, how to stack them up so you maximize your hit rate. Your hit rate increases the higher you stack these trades. That's why when you ask me, can you pass? Yeah, you stack the trades, they're going to pass, right? That's what it is. You stack it, and a little quote I have: if you stack it, when they stack it, you pack it. You pack the trade up and you beat them up. And they will. They'll give you 2 days a week. They'll give you layups. They'll be like multiple setups, right? Now, it depends on your trading, where you're trading at. Are you trading London? You're trading Asia? You're trading US? The hardest session to trade is US session. You're like, well, it's supposed to be easier. It's not because it's harder, it's because there's a lot of news, right? The setup is the same no matter what session you're trading. It's just the news. You're like, there's news at 10 o'clock, there's news at 8:30. When are you actually trading, right? It's a little bit hard, right? So the US session is the hardest to trade. Now, beginning of the year, I was in Vietnam. So I was there for until the end of May. So I was there for about 5 months. I was trading. And I had option to trade all 3 sessions. And it was phenomenal. No stress. You know what? If I missed a trade, I'm like, man, I got 2 more sessions coming, right? So most people, if you're trading just London, you only got 5 sessions a week, right? But if you're in Asia, you got all 3 sessions in front of you. 5 days, you got 15 sessions instead of five, right? There'll always be some 9 o'clock, where there's no 10 o'clock news, but there's 8:30 news. You come in at 9, 4 hour candle is closing. You're like, bam, that's my trade, right? Take a 1 hour 50-50 bounce. You wait for the 4 hour to do a nice little roll. Bam, you're long in it, right? So where you are also play the big part and what session you're trading, right? Asia doesn't move as quickly. It's much slower. It's a slower session, right? Certain pairs you can trade there. So you're looking for the yens, the New Zealands, and the Aussies to move, right? You should not trade the Swissies and you should not trade the CADs in Asia because the market is closed, right? All right, let me see if any other questions. Yeah, so so for example, if I take, let's say I take 2 trades and let's say I took 2 losses for the day, I'm done for the day. I'm only allowed 2 bullets, right? So the way it works is you're allowed 2 bullets. If I win two, I'm done. If I lose two, I'm done. If I win one and I lose one, I can take one more bullet because my day is net 0. But I only get one shot, one more shot. I don't get 2 more shots, right? One more shot. So if I win one, lose one, I get one more shot, which is 3 for the day. But otherwise, if I lose two, I'm done. If I win two, I'm done, right? Always remember, protect your downside. The upside will take care of itself, all right? How long have I been trading? Well, let's put it this way. I started around 20 end of 2012, so beginning of 2013, right? Um, maybe yeah, something like that, around 2012, 2013, something like that. Mainly because up until that time I was actually working, even though I was involved with forex and stuff like that. I wasn't doing any homework. I wasn't trading London. I was working in finance, so it was busy, meetings, this, that, whatever. And so up until the time I actually quit, like literally, like, all right, I'm done, and just walked away from everything. I've already saved up enough money, so I'm like, all right, I'm just gonna focus on trading. Even then, it took me several years, but I was lucky. I was lucky. I had certain things fall into place, very supportive family, so it all worked out for me. But it was a long journey, man. It's not like 1 2 years and or 6 months or something. Some people are lucky like that, but it wasn't. It wasn't my journey. Mine was long. I had to figure a lot of things out, a lot of rules, figure a lot of things out. Looked at losing trades. Why didn't it work? You know, you got beat up. Not 1 or 2, not 1 or 2 years. So it was a real journey. It wasn't. It was no quick fix. No, none of that stuff. Right? You get beat up, but you learn. You start going to break even, and you're like, all right, cool. You know what? I'm at break even now. 2.5 years, 3 years has passed. I'm kind of like at break even, not really killing it. But at some point, it just flips, and then you just start killing it. You're like, oh wow, this is just. How come it took me so long? Because it still goes through my mind sometimes. Like, wow, why it take so long? Must be dumb or something. Uh, thank you. All right, awesome. Um, Munir, salam. All right. Uh, would you consider trading a currency pair when there isn't a harmonic during your pre-market analysis? Um, so if you look at the 4 hour really quickly, right, they give you one ones all the time. This one happens to have a harmonic in here. They close below, back above, back below, you go short, right? Boom, like that. But sometimes they don't. They won't give you. See, there's no harmonic in here, but then they give you one leg out of the band, one leg in the band. If they pull back enough, bam, right? So this is a 90 pip stop. It did give you 100 pips to the water, right? So you can trade a 1-1 even though there's no harmonic in here. See? So this is an advance. Never close below. One leg out of the band, one leg in the band. Price closes below, hold back slightly, stop goes above this candle and it goes short. See? RSI below signal and below the market baseline. It's the same thing and going the other direction. So this is kind of weird, right? So this would be this move over here, long, right? Depending on how far, this is about 45 pips. It went about 53 pips. You actually went your 1-to-1 on a 40% pullback. So yeah, I mean, it's doable without the harmonics. That's not a harmonic. That's just a wingtip, right? This Steve is not here today, so I don't know what a HRE process is, but message him. Steve at beatthemarketmaker.com. Yes, homework is everything. This is how you sharpen your chart vision, right? How many times should I re-enter to trade an anchor? Again, Peter, I am not an anchor trader. I don't normally trade anchors. So if I take it the first time and it doesn't work, I'm done. I'm more of a bounce trader. I'm looking for bounces. And normally it's, first leg, one entry. Or, pull back, one entry, or whatever. If I'm going quarter, quarter, half, half, whatever I'm doing. If I'm going, half a position 1-to-2, half a position 1-to-1, book it, and I'm done. Right. So it depends on how I'm, if I'm in line with the daily trend. Let's say I go half half, I make 1.5. If I'm looking for 3%, I just take 2 trades, I'm done. Right? I would nail it. So it's not really that hard. Just have to homework it, know your stats. Know your stats because each setup has a different stat, right? Not all you can't lump all the setups as, oh, that's my stat, right? If you're looking for, we have things called an AR move. That's a different stat than an ID moves, different stat than a water bounce, different stat than a catch up move. So 5 minute move. So it's all of them have different stats, and you have to know them. Is it hard to know them? Not really. I mean, you just have a spreadsheet. You just be like, okay, I don't remember them. Just go look at it, right? Right? Exactly. So my edge would be understanding. I have a bias, so I stick with the bias. It's not like, see, some guys are like, well, if the trend is long, but if it shows me short, I'm gonna go short. I don't do that, right? I also don't chase the trade. If I miss the correct entry, I put my pending in there, and if it doesn't pick me up and it runs, once it goes 1 to 1, I remove the pending, because if it comes back, it's likely I'm gonna get stopped out, so I don't want to take that trade. All right. So from my pending to where the first TP is supposed to be, if I don't get picked up and it goes to my first potential TP area, I cancel my pending. It's over. The trade is done. I look for the next setup. I don't chase it. Okay. I like to book 1 to 1 and then 1 to 2 and then 1 to 3 if it's available. All right. They always say you never go broke booking profits. Now there are different styles of trading. I know people that they just literally move their stop to break even, and then if they go 1 to 5, and then they just let it go 1 to 5, and then they try to grab 1 or 2 trades a week. That's it. Just a different way of doing it, right? Because I have so many opportunities every single week, right? So based on the homework I've done, I know let's say on average I get about 20 to 25 setups a week based on the 12 to 14 pairs I'm looking at, right? So I know I got a lot of opportunity. The question is whether I'm present and whether it runs. The only thing I can't control is the outcome of the trade. That's the only thing I can control. Everything else I can control. And the entries, the pullback entry, my stop, my position size, what setup I'm trading, trend, counter trend, everything else. Only thing I cannot control is the outcome. But if everything is stacked in my favor, the outcome tends to be very good. All right. Having said that, thank you very much for joining. Glad you guys could make it. I'm sure Steve is going to post some of the videos and stuff like that on Instagram or what, Facebook, or whatever else he's social media he's on. I personally am not on any social media. I like to just sit and trade and figure things out, and that I do my thing. I don't do all that other stuff. So, but hopefully I'll see you guys in the DMR. There's a lot to learn, a lot of good stuff, a lot of good rules. I'll catch you guys later. Take care. Thanks. Thanks, Jason. Appreciate it. Ciao. No, I don't hold trades over the weekend, bud. Yes, Fractal Pips, FRACTALPIPS@gmail.com. FRACTALPIPS@gmail.com. All right? Okay.